Assalamu alaikum all. So in this video, I'm going to give you my thoughts on whether it's time to buy or sell. So we've had a crazy run in the market as of late. 1 hour, you look at the market and the NASDAQ is up 5%. Look at it the next hour and it's down those 5% that it was up. So there's a lot of indecision amongst investors. Is it the time to buy the dip? Is it the time to sell the rally? Stock market investors are not sure what to do. And I think part of this is due to the fact that really the last 2 years and especially 2021 kind of spoiled us. I mean, after the dip that we saw in March of 2020, it's basically been smooth sailing since then, and investors got this idea that basically stocks only go up. But that was actually not normal. What is normal is 5 to 10% declines. We've seen since 1946, we've seen 84 of them. And the average time to recover from a 5 to 10% decline in the market is 1 month. We've seen 10 to 20% declines in the market 29 times since then. The average time to recover in months is around 4. We've seen 20 to 40% declines 9 times since 1946, with the average time to recover in months being 14 months. And we've seen 40 plus percent declines in the stock market 3 times, with the average time to recover being 58 months. So stock market volatility is the price that investors are paying for the return they're receiving. Now, some people have responded to this recent volatility by selling all of their positions. Perhaps you've heard of Meet Kevin. He's a famous personality who decided to sell all of his $20 million stock and crypto portfolio because he thinks the bottom will be closer to March. And I've had one person who messaged me and told me that he did the same thing. He sold everything. Let's call them Meet Kareem. And so the question that suggests itself is this the right thing to do? Well, in this situation, I like to recall the Quranic verse, قُلْ هَاتُوا بُرْهَانَكُمْ إِن كُنْتُمْ صَادِقِينَ. Say, give me your evidence if you are indeed truthful. So let's look at the evidence. What do the numbers tell us about when is it time to buy versus when is it time to sell? To answer this question, I found a very interesting article that was written on thestreet.com entitled, Why the VIX Says This Is the Time to Buy and Not Sell. Now, let me preface everything with, this is based on historical returns, and past performance is no guarantee of future results. Just because something happened on average a certain way in the past doesn't mean that this is for sure going to play out moving forward. Perhaps we're in a black swan, one-of-a-kind event in history that may yield very different results. But I think our best bet is to look at history and see how things performed in the past if we're going to try to project into the future, with the understanding that things may change. So this article reports that back in 2020, a research paper was published that examined whether or not the VIX could be used as a buy or sell signal. And the VIX attempts to measure the level of volatility in the market, which is commonly understood as the level of fear that investors are experiencing. Now, the paper concluded that, in fact, the VIX index, the fear index, was actually a pretty good buy and sell signal generator. It found that when the VIX was high, it's likely that you're buying at low prices, and when the VIX was low, the level of fear was low, it's likely that you're buying at high prices. So if you want to buy low and sell high, you would buy when the VIX was elevated and you would sell when the VIX was low, at least according to this paper. And I should mention here, not investment advice. I'm just saying this is what a look into history has shown us. And they have this extremely interesting table that shows the average return that investors got when they invested at different ranges in the VIX. So for example, the average return that investors got in a 500 trading day period, if they invested when the VIX was between 10 and 12, was 6.43% for industrials, 12.03 for consumer staples, 9.8 for energy. This was the average return they got if they had invested when the VIX was between 10 and 12. Now, if the VIX was between 45 and 50, so the level of fear was much higher when those investors made their purchases, the returns that they got for industrials, for example, over the next 500 days was 98.3%. And it was 93.25% for materials. And for technology, 80.25%. And then the study concludes that the ideal time to start investing would be when the VIX was close to 33 or higher. Now let's look at where the VIX index is today. And if we do, we see that the VIX has climbed to around 30. It actually reached 32 today, but currently, as of recording this video, it's at 30.5. So, is it time to buy or sell? What I can tell you is that, historically speaking, it's been a better time to buy now when the VIX is elevated at 30 than it was to buy, let's say, back in August 2021 when the VIX was 17. Could the VIX go a lot higher than where it is right now? Is there a lot more downside to the market compared to where it is right now? Absolutely, there may be. If we zoom out here, we see the VIX in March of 2020 was 66. So the VIX could be a lot higher than what it is right now. And the market could fall a lot more than it has already fallen. But what I'm saying is that this is a better time to buy, at least based on what we know of history. This is a lot better time to buy than when the levels of fear are a lot lower. So the common saying on Wall Street, which I'm sure you've heard, is be greedy when others are fearful, be fearful when others are greedy. And the data actually backs this up. Warren Buffett, the famous investor, which I'm sure you've heard of, has a pretty profound quote. He says, "The market is a tool for transferring wealth from the impatient to the patient." And every trade has two sides, remember. It has a seller and it has a buyer. So all the selling that's going on, there is an opposite side to each of those trades, which are people that are buying. And it occurs to me that the people are buying are likely not the impatient ones. They are probably the patient ones. And the people who are selling are likely the more impatient ones. So this transfer of wealth, I think, is probably flowing from the seller to the buyer if the buyer has a long-term perspective. Now, am I saying go out tomorrow and buy everything you can find? No, I'm not saying that. And that's certainly not what I'm doing. And people who are following my stock portfolio know that that's not what I'm doing, but I am buying still. What I am saying is that I think that probably panic selling is not a good idea. At least historically speaking, that doesn't seem like that's the right move. And what I am saying is that if you are patient and you're willing to have a long-term perspective, then I think that this market could end up being a really great opportunity for the average investor. Now, this is how I'm looking at it. This is not investment advice. Make sure to do your own due diligence. I may be completely wrong in everything I am saying, but this is just how I am looking at it. So I hope this was useful. I hope you found it food for thought. If you'd like to follow my crypto and stock portfolios, you can do so by becoming a member. If you enjoyed this video, benefited from it at all, then I would really appreciate a like and subscribe so we can see each other more often. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.